But let's discuss what we can expect from the BOJ. Sayuri Shirai, she's professor of economics at Keio University and previously served as a board member at the Bank of Japan. Sayuri, always great to get you on BOJ Day. There was really not much expectation of a rate move by the BOJ at this meeting. But I wonder, given that we do have the chaos around the Middle East and, of course, oil prices surging, if this will give a little bit more justification for the BOJ to hold, despite a little bit of more strength when it comes to wages and the broader economy.
Yeah, I think dilemma faced by Bank of Japan is even more strengthened because inflation was coming down. Actually, in January, inflation was dropped to 1.5, below 2%, and thanks to that, the real wage turned into the positive. So I think BOJ expected inflation will stay below 2% for a while. And then toward the end of this year, the economy recovery pick up. So inflation starts to go up again to reflect the rising demand. But this scenario is no longer valid. So BOJ really have to check, their scenario is still makes sense. And then next April meeting, they are going to show the new projection.
The Shinto wage negotiations also seem to have gone well with people getting big pay bumps this year as well. If the BOJ has been saying that it was about wage growth and also inflation dynamics, and you have that cost inflation because of oil prices, wouldn't this be the right time to act sooner rather than later?
So if this Middle East issue didn't happen, it was possible for BOJ to raise interest rate in April. But now, in the past 2 years, the Shunto, wage negotiation led to the 5% increase in wages. But this is only among large companies. If you include small, medium enterprises, the wage growth was a little above 2%. So small, medium enterprises very slow to adjust in terms of wage hike. And now, because of this, Middle East issue, and we depend so much on Middle East oil and naphtha, so I think it's a bit more stagflationary. So BOJ have to be a bit more careful in terms of raising interest rate. Also, yen's depreciation is the biggest concern.
How fragile is that sentiment when it comes to business sentiment, when it comes to the strength of the virtuous cycle?
Yeah, so BOJ always says there is a virtuous cycle from wage to prices, but to be honest, that hasn't happened because many companies say they raise wages because living costs are much higher, and the serious labor shortage force them to raise wages defensively. So it's not really virtuous cycle. But if inflation has stayed low, it was possible that real wages finally starts to go increase and stay there. But I think now, let's see what will happen to this oil price. Gasoline prices are already much higher now, so it's not going to be the same story.
When it comes to the yen, has tolerance in terms of a higher ceiling or a lower ceiling, I guess you can say, when it comes to yen weakness, has that shifted?
Yeah, this is a dangerous zone now. So it's now nearly 160. I think today, after Governor Ueda's meeting, during meeting, people are really paying attention to what he will say. Remember in the previous meeting, January 23rd, only yen was depreciating sharply, right? Reflecting Takaichi-san's view, expansionary fiscal policy, etc. So yen was depreciating, and during the press conference, Ueda mentioned that he's not going to raise interest rate anytime soon. So such kind of a dovish the remark led to the sharp depreciation yen to nearly 160. And then there was a rumor about New York Fed rate check, right? Led by U.S. Treasury. So thanks to that, yen started to appreciate. But this time, it's not the Japan's issue, right? It's a U.S. dollar strength. So it's very unlikely that the U.S. New York Fed will do the rate check this time. So it's more challenging for Japan in terms of yen's depreciation.
President Trump doesn't necessarily care about all of those macroeconomic dynamics, and he's probably in a very bad mood right now because of things around Iran. What are the risks going into that summit? Because I remember just a couple of years ago, too, before President Trump became very friendly with Prime Minister Takaichi, he did not like weakness in the Japanese yen.
Yeah, so yes, so he doesn't like yen's depreciation, and also Bessent also say Japan, Bank of Japan should raise interest rate, so certainly true. But at this moment, I think U.S. understand this, strength of U.S. dollar and the depreciation of Japanese yen together with Korean won is related to Middle East and our excessive dependence on Middle East. So I think issue will be not exchange rate this time at the White House meeting on the U.S. time today. It's more about security issue, I think.
How much is it of a domestic political issue for Prime Minister Takaichi as well, given that the Japanese public is not very happy with the Iran war at a time when household living costs are also going up? Does the macroeconomic situation present a risk for Prime Minister Takaichi?
Yes and no, because she abolished some kind of gasoline tax at the end of last year. Thanks to that, the gasoline prices dropped by 25 yen. But now, because of this Middle East issue, the gasoline prices went back. And so, thanks to this tax cut, gasoline prices are much better than, what would have happened. So in that sense, we cannot really, put a lot of pressure to her. I think, it's more issue is, how we move away from Middle East dependence, and then probably we will put more investment in U.S. Oil and gas. And so that will be discussed. And I think public is a bit more worried about conflict side in Middle East.
So, Shirai, always great to have you with us, Professor of Economics at Keio University.